Okay, let's just take a quick look about what happened over the last couple of days before Good Friday and Easter. Aussie dollar pretty much did what and is still possibly working on, maybe done, the pullback that we're looking for. It's hard to say exactly when this is done, but it's getting close. I'd like to see it pull into this, and I think there's still a good chance that it will. If we go back to our 20-minute chart, we do have some possible reasons why it may be done. We took out these sort of pre-holiday lows on Sunday, and then here this morning we've come up and taken out some highs. However, we're bouncing off the 4-hour moving average and our frequency line and coming back in a bit. Just have to wait and see how that pans out. I'm a little hesitant to get in right now real quick because this is just a lot of narrow range slop, and I really want it to come back and meet that daily target, so I'm not going to get in a big hurry in spite of this thing kind of taking out some minor highs here and there. So I think we'll just leave it alone for now. If it comes back, trying to find a good frequency on this 20-minute chart. This red line, this red median seems to be doing a pretty good job. Well, of course I missed the A pivot. Alright. Let me turn this fan off so that we don't have a whole bunch of noise in the recording. Alright. Still, yeah, doing a pretty good job, even though now that I've adjusted it, actually caught the high perfectly, caught this. That's great. So we have good frequency going forward. Zoomed through it here. Kind of getting sloppy. However, that's interesting. It might be worth trying a buy. We may not get these last few 30 or so pips into the area we're thinking of, because we're already on top and trading. This isn't it's not precise science by any means. We get enough people that are excited about buying in this area, and they won't get it. Everybody won't be able to get a cheap price. It's as simple as that. So we'll watch. Maybe if we get multiple tests and retests on this going into the afternoon, might consider a buy there. Yen is a very happy trade. I'm still leaving my stop down here. I'd like to see a more defined swing. It would be nice to get up here, but this is a little dubious for hiding stops. So I'm going to be patient and leave it down here and let some more another swing form. If I'm lucky, it may not even matter, and we'll just do something like this over the next few days, and it'll take us out of the trade at a very nice profit. Canada is being kind of sloppy. It's kind of ignoring all my lines, so we'll just get rid of them. This multi-pivot line is working pretty well. So here we are at the point of ignition for this thrust up, and now we've come back on the other side. It also makes the apex of this triangle. Consolidation pattern in here. So this is a very interesting multi-pivot line to me. Let's see if it does anything on the way back. Yeah, if you back tested some more, there's definitely some more lows touching it there. And probably actually more significant right now than this one is. Is there a trade? Not real anxious about getting long Canada because we're still stair-stepping lower. I guess we did take this out. Well, we're not doing very well getting through this 382. so I'm not going to be in any big hurry to do anything in particular here. Do I see anything? I don't know. I think if I spent some time drawing on here, I might find something that if it got tested and retested, I could draw on, or I could take a trade off of. But right now, I'm not going to bother to draw anything in until I see something like, you know, the swing taken out at least. So until that happens, I don't think there's any real point spending a whole lot of time drawing around on the chart. Okay, we were also looking at this hourly chart of the Euro odd, and this is what we said. We want to set a nice clean test and retested the purple downsloping line. Well, we never got that, and it did us a favor by being patient, because we zoomed it and then we printed lines all over it, lines all over it, lines all over it, lines over it. Never got any nice decent separation below. If we had gotten anxious and might wanted to use the sliding parallel over this last one, even then, even if we, you know, if we cheated and brought it in, then we might have sold that and gotten popped if we'd put our stop there. But keep in mind, the real swing is the last swing high is here. The rest of this is all inside. Because we didn't make any new lows here. So this is the last swing high. So really your stop should go over there, because all these other guys are made to get washed out. Sometimes this gets washed out too and it goes down anyways, but there's a lot of nice defined structure in here, so I really don't want to see that taken out. Then you have to kind of start thinking about going the other way. Let's see. So, would I want to get short this? It's awfully sideways looking right now. I started looking at this on a 4-hour chart, and I drew in this downsloping red median line that has something to do with price. This here is especially interesting, that we got this zoom through, kind of coil, a little bit zoom through and fail and retest from the other side. But it's still pretty sloppy, and I need some more tests before I really need to be trading off this thing, especially this kind of interior sliding parallel, which looks like it's working right now. Maybe it will work, you never know. But I don't know how I would feel about, you know, if it came down and went back up and tested on it again, whether I'd really want to sell it with a stop here. Well, a good test of that is, how much does it cost? It would cost, if we tried to get in at about 48, that's a good 60-ish pips. 60, 70 pips. Where would we want to go? Well, we'd be looking for something pretty major, well, at least on this chart. Probably these lows. Somewhere down here. Which also comes in about the area of this lower median line parallel. So you'd probably take it from here to the lower median line parallel, which is definitely a great risk to reward. It's just whether you feel like you can risk 60 pips, or is your account large enough to make the size appropriate without risking too much of your account, if you're going to risk 60 pips. So that's that. We really didn't have any clue that this was really rolling down. If I had been looking at this, I don't think I would have taken this trade on the sliding parallel, even though we did get this test with a nice separation. It took a long time and went sideways. It was over the weekend. There was holidays, all kinds of reasons not to get involved. Plus, I'm just not really excited about it in general because of, well, mostly because of the holiday, but also because this downsloping red median is not that well tested for my taste. It's good. I mean, it gets in that area and it slops around and reverses, but a lot of over under type action, a lot of slop, a lot of slop. All right, what else? Yeah, stock markets. Well, they keep going up. What can you say? It's a bull market till it's not. Um, we came all the way down here, and we thought that maybe, hey, if it's going to roll over, it'll do it here. But instead of that, we found another. We got all this volatility up, volatility down, all over the place, and then big bull bar, big bull bar, big bull bar. So now this is the real test of whether we're really going to go up and make a new high, or if we're going to go ahead and roll over here. We need to see these guys taken out. Really nothing more to say than that. I can draw all I want on here, but until that's taken out, that doesn't really matter. Even if that is taken out, we could still see something like this, this red downsloping median line come into play. It's pretty obvious that it's important. We get the test here, the retest from the backside here. Maybe we just wash that out and we get up to where some old highs were, and people decide, hey, that's enough for me, thank you. I'm not going to try and ride this thing higher anymore. We'll find out. There are a lot of seasonal and yearly things that make me a little bit more concerned about this year. One was the very negative January that we had, and the other is that this is a midterm election year, which is generally not so great for the stock market looking back historically. But all you can do is follow price, because those things fail all the time. They're just general guidelines. Also, one other thing that does concern me, I was looking at IWM, the Russell, earlier, and it's only come back to its 382. At the same time, the S&P has rolled all the way back up to its 618. What does that mean? That means fewer people are willing to put money down on smaller capped companies, smaller capitalized companies. You've got something that only retraces 1/3, while something retraces way back 2/3, like the S&P or the Dow. I don't usually look at the Dow because it's only 30 companies, but the S&P is 500 very large companies. You get 500 very large companies doing much better than 2,000 little bitty companies. It should be a red flag for you. You want to see the little companies doing well relative to the large ones. Why? Because when things start getting hairy in the stock market, you don't want to be in these little bitty caps if you're small cap stocks, if you're a money manager, because the liquidity is thinner. They tend to get thrashed around more. If they were darlings of the market before, sometimes they really end up being, Dave Landry always says, a source of funds for the next leg, or if we're still dealing with a bull market. What that means is if I rode this crazy momentum stock up 100%, then I may be thinking about taking my profits in that and rolling it into something that hasn't had such a crazy move. Long story short, too late. You don't want to see the guts of the market, which I usually measure by using the Russell, doing worse than large chunks of the market, which I use by measuring the S&P 500. And right now, the guts of the market, the internals, are saying, hey, we're not so excited about this last rally, and we're not anywhere near our last swing high. So, I mean, how different does this chart look with this meltdown compared to the ES? I mean, this thing retraced all the way back up into here. That means people are much more willing to buy into larger cap stocks than they are little ones. And that's not a good sign of health of the market. It just isn't. That's the rule. I mean, it's not a guarantee that things are going to go down, of course, but it's not really one of those nice, healthy things that you like to see. Yeah, let's take a look at banks since we're talking about sectors too. Banks look a little bit more like the S&P does. They retraced further, but they've only gone to about 50%. Where's the S&P? If I can click on the right line here. 50%, whereas the S&P has gone all the way up here to almost take out this swing high. Again, not a real excited sign of health. However, there are some very large banks, and some of the banks are part of the S&P 500, so that's why you see this retracing more than the small caps. All right, so how about the Nasdaq? Let's take a look at the Qs. Also, really not what you want to see when you're talking about a nice continuation of a bull market. We're getting these retracements. If we measure these retracements on the way down, this one was better than the 618. This one was a 382 and then fell down some more. This one made it all the way up to 618 and made us wonder, hey, was this significant? Do we take these things out? This failing is a really negative sign for the market, because what that meant is that we washed these guys out of any shorts that they had with stops there, and then went down anyways, and that's not good. So continuing looking at these retracements down, this one's just a little bit better than the 382, and so is this one. Much weaker than the large caps. Not what you want to see. You want to see these things doing better than old fogey stogie companies. That's where the money runs to when things start to get a little hairy out there. And it can be the sign of, or one of the beginning signs of, a market top. So we can't say that for sure, but still it's not the right kind of thing you want to see as stocks are pulling back. What would be interesting is if we did pull back a little bit and then we got a blast off that was at least as good in the Russell and in the Nasdaq as it is on the S&P, taking out highs and things like that. I wouldn't, if we're not taking out swing highs, then I don't really care what the relative strength of each one is for the other. If we're not taking out swing highs, it's in a downtrend, and that's all we really care about. But if we did do something where maybe one market took out some pretty significant swing highs and another market didn't, and the market that did was the Russell or the Nasdaq, then we might get a little bit more excited about being bullish. Right now, things aren't so great for that. But hey, you know, 1 or 2 days could change that really fast. If we get up in here into the 618 area, and that does better than the small caps or than the large caps, then that would certainly change my mind. But right now, why is this only retraced 382 when the big fatties have retraced all the way to 618? Not happy with that. Okay. Anything else we want to look at? Some gold. Yeah, you know, I'm not real. I haven't been bullish on gold since 12 and 11. I was never bullish on gold that much, period, because I didn't really trade it. But for those of you that think gold is the next big thing, because of the way the banks are, or the central banks are printing money, just be careful, because there's been a lot of warning signs over the past couple of years that this may not be a bull market anymore. Taking this out is not good. And there's been no, even if we took this out, but there have been no really significant swing highs busted. And even if we took this out, why? Because this wasn't a new swing low. At best, you could call it a double bottom. It really, what would I want to see to think that gold was done? You know what I would prefer to see? I'd rather see gold come down, wash this out, and then take off like a rocket from there. That would let me know that, hey, maybe we stabilized enough and we can come back up into this range again. But let's take a look at the weekly. Let's just delete all this stuff. But unless we see something like that, where we came down, took out these double bottoms, or maybe tested them again and shot off like a rocket. Right now, we don't have enough. It doesn't look like there are a bunch of people trapped on the wrong side of the market. I don't see a lot of people short gold. How could I tell that people were short gold? Well, if we came down here and then it blasted off, a bunch of people were short gold, and when it started turning around going the other direction, there weren't any pullbacks, and they all got trapped, and everybody needed to buy gold for every reason under the sun. There's no real reason to buy here other than this is probably a fairly major Fibonacci area. Let's see if we can't get some more price action in here. That's all my charting software is going to give me, but that's probably about as far as it's going to go. I believe the lows were back in 2002. You know, even there we got the major Fibonacci level that we busted rather than obeying. What about this one? Again, why did we come back to retest this busted? Well, let's make sure we draw it right. Come back to retest this busted 1-to-1 several times, and not been able to get through it. So really not great. My gut feeling is that we're going to see something like over the next few months. We're going to see something like this coil up, or maybe a little bit more, and then probably break down to do lower lows, because there's just so much structure that we've taken out in that direction. It looks like it's going down. You know, maybe if you scrunched up enough, then this is just going to be a bigger one of these like we had in 08 and 09. But look what happened when we did that there. Let's look at that. Some big volatile weeks, but honestly, was there anything that we took out that was a decent large swing? No, we came back into this consolidation pattern, and sometimes drawing out the apex of these triangles is an interesting point to look at. And you know, we kind of got close to that and then we just took off, which looks a lot different to me than this does. Nice. Test, test, test. Can't ever get over highs. Break it. You know, and then all kinds of sideways action. Coiling and new lows. Significant new lows. I mean, taking these out was a big deal. Taking this out was a big deal. This not so much. They haven't quite taken that swing out yet, but it didn't look like what happened last time where we recovered so quickly. And I still hear lots of people talking about gold. There's still just, I can't turn my radio on without, you know, we buy gold, or protect yourself from the government's actions, that kind of thing. And that's been going on for several years now while we've been putting in this top. not the kinds of things that you want to be hearing. Because who told you about gold? Did those guys tell you about gold when it was back here at 200? No. Nobody was talking about gold at 200. It was $200. Nobody cared about it. You're not going to get advice that you need from the radio or from a magazine. That's why we look at price. We find the things before it becomes mainstream. If everybody has already learned about it, then all you're going to get is this price action like we're seeing here. Oh yeah, wow, this is the cheapest it's been in a long time. Let's buy it at these lows. Yeah, sure, it might work for a little while. It might even take you up here. Is it going to take you to new highs? Maybe. You never know. But the likelihood of that actually happening is much lower. I think there's a big rotation going on in gold, and I haven't seen any evidence to the contrary to think otherwise. Okay, so enough of that rant. Anything else we want to talk about? I haven't looked at Apple in a while. It's kind of a messy slop. Yeah, I don't want to talk about that. Draw on that some more, and then we'll talk about it. Odd yen, same thing. Still coiling up in here. Still talking about maybe if we got down in here, we might consider a buy. The yen crosses in general are still in an uptrend. The ones versus commodity currencies like the Canadian dollar and the Australian dollar, not as strong as the moves off of the US dollar, which we're still consolidating in right now. I mean, you look at this daily chart of the US dollar versus the yen. Boom! Big triangle. New high. More consolidation. I mean, I really think this is going to take off at some point. I don't know when. To a really big new high. But I don't want to get in a big hurry for it, because there's lots of time. I mean, we're talking about decades here, and this is a nice start. Definitely something has changed. I mean, how can you tell something has changed? Well, look at it. That's not what I wanted. Doing this downsloping, this downsloping, and kind of making narrower lows. And something that hasn't happened before in years has happened recently. So don't forget that it did happen, because it's important. So kind of big falling wedge looking thing. But we haven't had a huge run up like this. And these are weekly bars scrunched up so tiny that you can't even see them. But we haven't had a big run up like this since, not even in here in 08, 09. Maybe this, but this was way sloppier than this is. This? Yeah, sure, but that was still back in 05. And we still had these lows to work off of then. I mean, you know what this looks like? This looks like this. More than anything else on this chart. So we need to pay attention. I don't think there's going to be any problems with yen longs for a long time. Excuse me just a minute. So, I mean, and we get back in here, and sure enough, you know, bull bar, consolidation, bull. Still bullish, but it retraced back into it, so it printed bearish. 1 out of a dozen weekly bars. This was a crazy run up at the beginning of, end and beginning of 2013. And some kind of pullback after that is definitely expected. But what did this turn into? Nothing but a big consolidation pattern. That's exactly what you want to see for price resting up and storing up energy for another leg higher. So yeah, there's nothing to be bearish about in the yen, especially versus the U.S. dollar. And I think at a minimum we're going to get up here. We're going to test these old highs and this median. Somewhere up in here in the next couple of years. Big, hairy, game-changing for governments and companies and everybody else move. I hope they're paying attention. Okay, I'm going to shut it down here. I want to come back at some point either today or tomorrow and do a talk on structure. I think is going to be the next lesson. Lots of nice things at paying attention to swing highs and swing lows, busted gaps, filled gaps, points of thrust, beginning and ends of thrust. Watching those levels can tell you so much about the market, so I think it'll be worthwhile to do a little show just on that. So maybe we'll record like a little 20-30 minute video on that, and I'll just ramble and try and point out as many examples as I can. Hopefully it'll make sense for everybody. Okay, we'll talk to y'all later. Thanks for watching.